For more zero contains to invest. We're talking about investing, finance, and professional development for today's systems only. The investment we're going to talk today would be Ethereum TKTH. First, I want to say happy Tuesday, everybody. Have a great week so far. Respect to recording time of 11:03 a.m. on the Eastern Time. Ethereum currently trade $4,308, down about 5.59% so far. On the overall crypto market, we can prominently see that we are relatively in the bearish sentiment today. And I would say the macro catalyst on driving this sell-off or correction, if you may, is both the technicals coming true, as we know we've been leading relatively more of an overbought level for the last, I would say, 50 days so far, right? And also with respect to the yesterday's affectation, right, the specific one on the infrastructure bill, the $1.2 trillion bills that was passed by Joe Biden himself. Within the bill, there's a specifically laid out tax provision around crypto assets, right? And it seems like based on the verbiage in the bill, there will be a mandatory 1099 filing for crypto assets going forward, right? It's a tax specific mandatory initiative that they want to be, initializing on. And whenever you hear anything along the line with respect to tax provisions, regulatory restrictions, compliance, infrastructure, or tax or commissions related type of verbiage as a key word, right? It'll typically trigger some sort of a sell-off because it is kind of counterintuitive to the mantra of crypto assets, due to the fact that it is supposed to be decentralized, right? But now, having that mandatory $10,000 of transactional value to be disclosed in a taxational perspective, I can understand how that could subsequently, people might be a little bit more wary around that dynamic, right? Knowing the fact that this is still relatively, nascent type of, infrastructure, a nascent type of financial assets as a whole. So this is both a type of buy the rumor, sell the news type of affectation type of and I think with respect to the bill passing, it was just a reason for corporate investors, but also the subsequent retail investors like you and I to be following through to translate into the current momentum that we're seeing right now. So you could say that this is a bad thing, or a good thing, but I would say this is actually a good thing in the long term, right? It's important that we have some sort of a provision or compliance infrastructure to provide more clarity and transparencies for this relatively convoluted ecosystem at the moment, right? And also, this gives us another opportunity for us to dollar cost average at a more logical level because we've been running relatively hot, right? So this is a good, opportunity created for us to allow us to come back in and build that long-term value proposition that we're looking for, right? So before I dive into technical, let's just go through the news real quick. I think some of the news are, relatively interesting, but nothing really substantive. So let's just go through them a little bit. So with respect, first one on 55 minutes ago, Benzinga, Coinbase shares struggle as Bitcoin Ethereum takes a dive. So this is basically talk about the earnings results that happened, I believe, a couple of days ago, or last week, if you may, on Coinbase earnings. Despite the quarterly miss, right? I would say overall on the annual perspective, they still rocked it completely out of the park. So a little bit short term of cool down is healthy and also necessary. Actually, think that the dip that we saw on Coinbase was actually a buying opportunity if you believe in the commercialization, if you believe, the long-term fundamental of this business. I thought that was a relatively good opportune time for investors to be taking advantage of that discount level that we got to, right? So the next one is talking about with respect to Decrypt 2 hours ago, but talk about liquid staking project. P-Stick raises 10 million to strengthen Cosmo. And Cosmo and Ethereum are basically brother and sister in terms of their proposition. So it seems like there's more backing on the financial monetary perspective of 10 million to strengthen this infrastructure to sustain the long-term value proposition of Ethereum, which is something we appreciate. And then the next one is talk about going Cointelegraph about 4 hours ago. A dual ledger layer 1 plans to supersede Ethereum and Solana by solving the blockchain trilemma with the feeless paradigm. I'm not sure what this is specifically. This is a little bit more technical than I'm typically used to. But it seems like they are planning on, implementing some sort of new dual ledger layer technology that will, overcome some of the hurdles that Ethereum and Solana are currently trying to solve right now, right? So seems like this is interesting, but it's still work in progress, so nothing confirmatory at the moment. The next one's on Market Watch, and I don't know why they're saying this already. Has crypto winter arrived yet? So it's basically depicting, around the fact that Bitcoin is sliding back down to the 60K right now, right? We are down about 5% for Bitcoin right now, and Ethereum just following through, down about 6% right now. I don't think, crypto winter is maybe a little bit premature, right? I think we are just taking some time off, cooling down a little bit. But winter is a little bit more of a media affectation to drive some fear mongering, which also indicates on the sell-off that we're seeing right now, which we'll dive into the technical in a bit, right? To see, technically there is a bottom that we can foreshadow based on the charts that we can see in front of us. So we'll dive into that in a bit. The next one's on CNBC again, talking about with respect to Bitcoin drops near 7% towards 60,000 as major crypto plunges. I mean, this is something that we have been foreshadowing for quite some time now. This is just cooling off, right? It's a correction, not like saying like a plunge. It's not a plunge. It's just yesterday was a relatively large in terms of the macro factor on driving the sell-off that we're seeing. But in terms of like a plunge, because just for the sake of correcting, it's not the real reason. It's just that the technical has been stretched up. So this is just called what I call normalizing rather than a crash per se, right? And then the next one, this is a quite interesting one. Decrypt 17 hours ago talk about Ethereum-based holdings among institutions up 19% in Q3 per SEC filings. So it seems like they're, in comparisons to like the Bitcoin institutional holding versus Ethereum institutional holding, Bitcoin in a relatively, perspective is decreasing in a ratio perspective versus Ethereum now. So, and Ethereum has specifically laid out in the article that they're up close to 20% in Q3. So it seems like there's more corporate adoption for Ethereum, which is something we appreciate, which also translates to the reason why we've been leaping up for the last 50 days so far, right? So that's pretty much it on the news front. So let's just dive into technical right now. So right now we are down about close to 6%. And apologies again, my voice is a little bit lower. My throat is still hurting a little bit. I did take your advice on drinking some like ginger lemon water, some honey. I took like some cough drops. But I try to. But my job talks a lot. And I'm talking with you guys on the camera too. So I'm just like nonstop talking. I don't know how I can ever fix this. But anyways, I need to probably cool down and talk less. So right now we are at the 46 out of 70. So we're cooling down. And this is basically the death cross speaking for itself, right? So I think ideally, as we cool back down to the 4,100, which we got to early today, it subsequently got recuperate back up. Basically, investors are betting that we won't break below 4,000, and we have some consolidation here. But if we break the 4,000, the next level is at 3,850, like we keep saying, right? The 3,475 and 3,150, right? But I think the bottom technically should be somewhere around here, 3,850 to 3,475, because we are still at the 50 out of 70 on the RSI scale, right? Bitcoin right now, we're still in a bearish state with the 46 out of 70. So ideally, buy back at the 58, which we try to get to. And I think we did break that, right? You see that we broke that briefly to 58, which is exactly the level that we talked about. But if we break that with a long way to go, basically back to the 40s, the 54, but in a more comfortable level with the 52,750 to the 47,750 as well. So I think I will buy between these levels right here, the 52 to the 48 from here. Dogecoin right now, it's selling down, right? You could see that the dip was technically earlier today. If you bought at the 22, which was the logical dip, we keep saying this, 22 to 20 cents would be the next logical dip, right? With the 42, we're still in the bearish state. So as we deplete further around like the 20 cents to the 21 to 20 cents, will technically be depleted back to the RSI of below 35, and that should be a dip for us. Cardano, you can see that with the 192 right now. So like I said, right, if we break the 2, we have to go down to the 187, which we got to, but we got oversold completely to 177, which at that point we're extremely oversold, below 35 definitely, and that's the reason why we see this mini candle instead of one red candle, right? So I think Cardano is not a bad level to buy some right now in comparison to the other ones that we've seen so far. Solana is selling down to $25 right now. So ideally coming back down, we are still relatively overbought despite how much we have been selling down right now, 7%. That ideally buy somewhere again, right, the 133 to the 113 from here. XRP has broke the around 110. We did break 110, but subsequently got back up because we couldn't break below 101. But again, right, the level to dollar cost average would be anywhere below 110 to and above 101, right? So that's the level that we should dollar cost average. So I think a dip right now is not a bad level to incur some risk at the moment. Polkadot right now with the 41. So ideally selling back down all the way to 32 to 25. Again, 32 to 25. Again, I kept saying this over and over again. Those are levels I would ideally dollar cost average at. Algorand down 10% right now. We form a huge stack cross with the 41. So ideally buy at the, again, 160 to 152. Like I keep mentioning over and over again per my previous videos, right? Shiba Inu is going to keep selling down, and the next level should dollar cost average be the 2750 to the 900 from here. So respective risk management levels, as we further deplete back down, right, I think these are the levels that we should ideally look at or look into buying, right? Again, these are my risk conservatism, not for everybody. Everybody have their own preference in terms of how they want to be incurring risk. But if you want to buy now, just feel free to do so and hold it for a long term, right? I think today is a much better level than days ago, right? In terms of the risk profile, right? We are slowly depleting, so the dips is definitely imminent. And I think I don't foresee us to be completely crashing down by another 50% or something crazy like that. I think contingent on no more black swan news that comes out, it seems like this should be just a healthy correction, a healthy normalization that makes sense, and it's logical that we've been talking about for quite some time. So no need to panic. It's something that is frankly something we've been talking about, right? So hopefully this is helpful. Really appreciate you for dropping by again, and stay tuned for this to come up. Take care.